Hello and welcome back for another weekend deep dive. My name is Justin, and this weekend we're going to try to answer the question as to whether or not the S&P 500 is still on track for its seasonality chart, and what we can do for this next week to try to make some money. The stock market has been crashing the last 2 weeks, and we just want to know whether or not we're still on track for the Santa Claus rally going into the end of the year, or if we have to watch for more downside. So at any point, if you're enjoying this video, I would really appreciate a thumbs up. Click on the button, smush it, and drop me a comment. Let me know. How are you feeling this week? I'm noticing that the fear in green index is pretty high. Are you scared? Are you happy? Are you getting greedy? I don't think a lot of people are very greedy right now. So again, drop me a comment. Let me know. Are you scared? Are you excited for this week ahead? What stocks are you watching? What are you doing? And I would love to know. All right. So to quickly explain things, I think that as of right now, we're on track. I'm noticing that at a high level here, I'm going to go through just a couple of notes. We're going to go through our normal schedule. And again, this is a weekly video. So if you're enjoying the channel, maybe you want to subscribe. So next weekend, you can see the update to this weekend's video. So here we can see on the seasonality chart that we have 4 tops. And then we have a bottom that gets formed here. And inside of there is a W, right? We got that dub. We know the bulls like dubs. So we'll see whether or not there's another dub that gets formed here. So we're going to look at 2 key charts now. We got Apple and we got SPX. So here I have Apple versus SPX versus seasonality chart. What we see is that on Apple, we got 1, 2, 3, 4, and then we got the low right here as well. So it's also matching that seasonality chart, 1, 2, 3, 4, and the correction. Perfect. Now let's have a look at SPX. 1, 2, 3, 4, and we got the dub. So the dub's already forming. So the question is whether or not we're inside of this part right here, if it still looks okay, and if we're still on track. So what I think is that Apple's actually providing a leading indicator for the SPX or SPY, S&P 500. So why could stocks not crash or right, the market crash for this year? Well, look at Apple here. Apple shows us that we have 1, 2, 3, 4 tops. Now we start the correction. So 1, 2, 3, 4 tops. We start the correction. What I would note here too is that we get a big cut, we get a dead cat bounce, and then we actually push back down to a lower low. So when I look here at Apple, I see something very similar. We come down here to the 50 DMA and we dance around, put in a lot of lower wicks, and then they drill it down to a lower low. Oh, and again, Friday was monthly OPEX. So there was a lot of money that traded hands. And again, I think that the fear is quite high. So I think they did a really great job on Friday. I'm not going to lie, right? I think they did a great job on Friday. All right, so if Apple is a leading indicator, and again, it is the biggest stock inside the S&P 500. Oh, also forgot, we want to have a look at Finviz for later. It's the biggest stock inside the S&P 500, and I think it's a really big deal. So for S&P here, whether we get a bounce or a fade into Monday, I think that as we go further and look at the actual technicals, the setup is still here for a win for the bulls, right? The technicals tell us that the bulls are still set up for a win. And I think that with the fear where it is right now, the market is poised to go higher. So we might move higher into Monday, might move lower. We'll go through the different scenarios here shortly. But at a high level, that's what I think we got. All right, let's move forward. Thinking about what could drive the news for this week. I think the biggest thing is going to be what happens on Wednesday. So as of right now, most economists see the FOMC announcement of bond tapering in 2 months. So what does that mean? They're thinking November. That's the biggest chunk of the pie here with 67%. Some are saying December, some are saying October, some are saying next year, 2% are saying September. So it would definitely be a surprise if we got that announcement. Again, keyword there being announcement coming in September. That would be a surprise for the market. So if we're going to get that crash and break the W, that's what I'd look for. At this point here too, what we have to remind ourselves is that the market is fearful, but it still loves Jerome Powell. So we're pleading to you, Mr. Powell, please don't hurt my stocks. Please just make lines go up. And what's really interesting here is that when we look at the yearly chart for the S&P, again, here we just have 3 candles here. Let's zoom out a little bit. This chart is so bullish. Remove SPY. If you looked at this chart, it'd be like, man, that's a bullish chart. I want to buy that. And here we got 18% year to date. So yes, Mr. Powell, be so scared, right? We're so incredibly scared. Right, we're so scared. And all we need is a little bit of reassurance from Jerome. This is a letter from a year ago, right? August 21st, 2020. Here we are, a year and a month later, and the stock market just needs a little bit of reassurance. We've printed an incredible amount of money to get here. So I think that printing a little bit more is the law of diminishing returns, where again, why not print a little bit more? We've already printed this much, so what is he going to say? Well, pretty much what the market is already expecting. Why would he want to rock the boat? And I think that right now, as we look a little bit later, again, what's happening in China just tells us that there's still no alternative to U.S. assets. So when we think about this guy, he's like really important right now, right? The world needs Jerome Powell. That's what I think here. The U.S. is losing a little bit of leadership in the world politically, and what I mean by that is, again, look and see what France did on like end of the week, right? Pulling some of their ambassadors, right, from the U.S., from Australia. Things are kind of politically getting shaken up here. Financially, the U.S. is still the leader, and everything this man has said has been accurate. What I mean by that is, he's told us that inflation is going to be transitory, right? We need more jobs and everything else on his mandate. Well, so far, the data that we got this week tells us that. It tells us that, right, there's still no alternative to the U.S., and we got that king dollar. So I think that that surprise retail sales number that came in on, I think it was Thursday overnight, like into Thursday, was really nice. We got 1.8%. We saw retail sales grow by 1.8% in the U.S., meanwhile, in China, we saw about 2% when they normally grow by about 7%. So the U.S. was expecting a micro contraction at 0.1 and a surprise beat, and China missed. In addition to Evergrande, right? Oof. We don't want to focus too much on that, but again, we've been climbing a wall of worry, and we got to the top of the wall, and now we're fading down a little bit. I think it's mostly options related, right? Yeah. If you guys wouldn't mind smushing that thumbs up if you haven't already, please and thank you. I think that right now we have another reason not to be worried. Why? Well, when we look around the rest of the world, our money has to live somewhere. So looking at our key notes for this week, what do we have? Well, we have a couple things here. There is still no alternative. So what does that mean? TINA. So where do we put our money? Seriously, where do we put it? In cash, right? We put it under the mattress. That doesn't yield nothing. And if this man delivers, right, he gives us that little bit of reassurance, right? Yeah, I'm not taking the sugar bowl away quite yet. In November, I will tell you when I pull it away. And again, one more time, let's look at the chart here. So, right, we could be here, we could be here. I don't know. I think that we're a little bit ahead of the move, where I think we've already chopped up a little bit. S&P might put in another low. I'm still looking for a gap down pump up. I'll look at that in a minute here too. I'm actually trying to get this video done in about 20-25 minutes, so I think I'm gonna get there. All right, I'm trying to be mindful of time. So again, weekly notes. I've already summarized some of these, but we're going to go through it again here. So Apple's impact in the S&P, Apple's impact on S&P in the market. We had to look at Apple versus SPX versus seasonality chart earlier, and Apple didn't really underwhelm this week. I just think that people were looking for more, right? We already knew about some of the features that were announced, so right, what else, right? This one more thing didn't come. What I would note though is that with the buy now, pay later and the pre-sales that we saw out of China, I think the US is going to be strong. The carriers have not really had much of an incentive lately to sell these iPhones, and now we're seeing that there's options being offered as low as about $10 per month. So even if there's not that overwhelmingly key upgrade for the iPhone, I think that people just being able to afford an upgrade might actually drive a cycle here on the 5G super cycle. And I think if we get pre-sales announced from Apple, that might be a really big deal. First half of the week, second half of the week, next week, I don't know. But I think that might be a really big catalyst. Pre-sales out of the USA. I'm looking at the iPhone 13 mini to myself, honestly. All right, pass or fail at the 50 DMA. We had this noted from last week, so we shouldn't be too surprised that we're around the 50 DMA. We were looking for this last week. The only way to get a W is by getting those troughs, right? Peaks and troughs. That's how a W gets formed for another win. Fed, September FOMC. We've been talking about this for about a month, right? It's coming up. We got economic projections. That's really going to matter. So watching that really closely. And for all the people who participated in the contest to make your dip buy plan, things have worked out really, really well. I'm personally closing the week out green again, not like big fat green, right? A little bit of green. I'm talking maybe 2%. But that's meaningful for me because as I'm reflecting on how my trading has gone, I'm remembering that I think a lot of people had a tough last 2 weeks, and they're ready to fold because they're fearful, and we're right around support. So, right, I know what people are planning on doing, which is why I'm not trying to be blindly bullish, but I'm trying to look at the evidence. And again, sell in May and go away and come back on Labor Day. Well, the big guys did. They're probably looking at the reports. So like, man, on autopilot, we crushed it this summer, right? making so much money on autopilot in the Hamptons. And now they're like, okay, well, liquidate that one, liquidate that one, liquidate that one, and now get some cash raised, right? Get some cash raised up. Now we're going to go buy this one, that one, that one. That's what I think's happening. We're seeing some stocks did not relent on Friday, right? Like Asana, right? Oh my goodness, is that stock strong, right? Team crushed 400. Net continues to move higher. So we're seeing a brand new set of leadership. And as I'm thinking about this out loud right now, what we've seen so far on the S&P, and the reason why it's not really faded more than about 3% is because there's always been a new sector that has stepped up to deliver the gains. And now we know that with the S&P 500 rebalancing going into Friday and Match being included, I don't know. Is it going to be on-line tech growth, which is going to lead the next leg up? I don't know, right? Match is now in the S&P 500. That's a pretty big deal. All right, looking at the notable events for this week, we've got FOMC on Wednesday. That is the most important thing for me. I would say this is all week, so Monday to Friday. FOMC on Wednesday, really, really, really going to matter. Monday to Friday, TINA, meaning there is no alternative like we talked about before. Where are you going to put your money? Seriously. Drop me a comment. Where are you putting your money? Under a mattress, right? Where are you putting it? Into crypto, right? Well, of course. Got to buy crypto. King dollar, which means that so what was really interesting too, we'll have a look at the charts in a moment, but VIX expiry was on Wednesday. And then we looked at, oh my goodness, right? Oh, the dollar had like a 0.8% move into Friday, right? Oh yeah, totally legitimate move. I think that China helped kickstart the rally on the dollar, but I personally think it's easier to manipulate the dollar than it is to manipulate SPY. There's a lot more dollars that flow into the market than flow into the dollar. Shorter term, right? So again, I think there was a little bit of manipulation on the dollar, right? Well, again, it's part of the game, right? Don't hate the player, hate the game. Final thing here is that I would say this is not really a focus for Friday. It's just a general focus. I'm noticing that we're seeing straddles put on for, I believe these are November. 90 days out, yeah. We'll have a look at this in a moment. I believe it's for November. So, right, I'm seeing 445 straddles getting put on again. What that means to me is implied volatility. It's lining up almost perfectly with Jerome Powell. So, again, buying a straddle just means that you think we're hovering about right here, and we're going to push off either one way or push off the other way. Bull push or a bear push. So when we have a look here at the charts, that's the really big question. So when I'm seeing big money get put on, not with put spreads, not with call spreads, but with straddles, all it tells me is that people are thinking we're going to get a big move. They were buying mostly between Monday to Thursday. And again, we didn't really do anything. And then boom, right, big move. So again, thinking about that middle area, we pushed off lower. So now the question is, are we going to keep pushing lower? Are we going to come back to home base? Or are we going to push back up? That's the big question for me. With the dollar amount that they paid, it's about $150. So from let's just call it roughly the midpoint here early in the week. 150 points lower means that they get their money back. They don't make money. They get their money back if we're at about 4,300, about 430 SPY. Okay, cool. If we go up by about 150 points, boom, right now we're at 460 SPY. Okay, so those are kind of the areas, 430 or 460. That's what this straddle means to me. And, oh, please, Mr. Powell, don't hurt my stocks, please. I plead to you. I plead. 18% is not enough, Mr. Powell. We plead to you. We pray. We hope. We hope the lines keep point up. We hope. And let's move forward here. All right. Yeah, I'm joking around a little bit because, again, we're on support. The man has been steady AF. And we'll have a look in a moment where he stands too. I have a story I can tell with the news articles. Rebalancing in MOCs. I am noticing that some companies transacted about 1% of their float into the close on an MOC on Friday, meaning the biggest candle for the entire week is on Friday into the after hours. MOC, market on close. There's big dollars that are trading hands here. So again, my story about the S&P kind of being able to like tread water, maybe drift down a little bit, right? Drifting down, but we're seeing that individual leadership is coming up to lead the S&P, right? Materials, and we saw financials, right? Then we see the reopening trade. I think we're going to rotate back to tech. Why? Because tech is the best. I'm sorry. I'm kind of going against what someone at Morgan Stanley said too, but to make money in the market, you have to be a contrarian. I don't know if here, right? Tech can't be the crutch forever, Morgan Stanley's Wilson says. Who cares what the man says? Look at the chart, right? We talked about this week on the streams. When you think about the services that you need, not the ones you want, but the ones that you pay for every month, and the things that you need. I'm a Canadian, so I'm thinking about how many Canadian companies do I need? Well, I need my power bill, which means I need to support the utilities, but beyond that, almost everything that I use is American. So again, TINA, that's what it means. So when there's all this cash like slushing around, it usually flows to the US. Even I had a phone call with one of our members on Friday. Again, he lives in Europe. He's a well-to-do person, and he's deciding to not invest his money into Europe. He wants to invest his money into the US, right? Everybody wants American, so why not? We have a look here at NQ, and NQ is not. This is the NASDAQ future. So again, we're looking at the futures markets because it shows us the entire volatility for the whole day, including after the market closes in the cash market, sorry. So looking here, we haven't tested the 50 DMA. So I'm sorry, Mr. Wilson, but right, you can keep crying out to the sea that we're not there yet, right, Wilson? Well, I'm sorry, Wilson. All right, we're not there yet. We're still above the 50. It is still the leader. It is still the best, even with Apple's decline this week. So that's what's really important to me. We talked about this. Again, Goldman Sachs even says tapering announcement is in November, right? This right here, I brought that up. So now let's have a quick look at this. I'm at about 16 minutes here, so I'm actually getting pretty close to being wrapped up. I can probably get it done in about the next 5 or 10 minutes here. Let's have a look at the last 1 year. So again, the reason why I'm looking at this is because when we have a look over here at the fear and greed index, a year ago, people were neutral. A month ago, they got extremely fearful, and then they got fear, and now fear. Now they're even more scared, right? We're getting even more scared. So again, 1 year ago, what happened? Well, since a year ago, as people were like, oh, you know what? I don't want to buy. The market has gone higher. Almost everything has gone up dramatically. So, right? Let people not buy. Let them not buy again. They'll buy. And I've been thinking about the macro because I'm noticing that when things have really maxed out is when, again, your Uber driver is telling you about these things, right? I've only ever heard about AMC or GME. Those are the only two stocks they told me to buy. Same thing with my mom, right? They never told me that, like, oh, you should buy Apple, you should buy Microsoft, you should buy Amazon. Never hearing about anything else beyond jokes. Why? Because I don't think that we've hit peak market yet. 2022, 2023 is when most economists are expecting that we're going to see that liftoff. So again, let people not buy. Again, 1 year later, here we are, dramatically higher. Let's look at the last month. People got so scared in the last month. What happened? Basically nothing. We see rotation. So again, there's new leadership that's stepping up to the plate, right? Let S&P go up. Don't let it go down. Let it go up. These pockets are going to be red. We need something to offset it to go up. Oh, Tesla, Amazon stepped up, Nvidia stepped up, right? Semiconductor stepped up, and everything else kind of treaded water. So there's your new leadership. And again, if you're able to rotate, then you make the monies. That's what I think. So again, over the last month, and then if we have a look back here at the fear and greed index, a week ago, okay, let's see the damage. Oh my goodness, right? Oh my goodness. Oh yeah. Again, is there a theme? Not really. There's not really a theme. What I'm noticing is there's pockets of like bright green. There's some pockets of bright red, singled out. It's not a theme, meaning it's not the whole sector. It's not the complex. It's not. So I think that we have to just be mindful of that. It's on the 1 day where there's damage. On the 1 day, there's a theme, right? This is pretty much all red. I think this is options related for quad witching, triple witching. I don't even know, right? You guys tell me, what was it? Triple witching, quad witching? I don't even know. Looking over here, this is a 1 day. So if we zoom out, we can generally see the themes, right? So 1 week ago, nothing's really changed. Individual companies are stepping up, and some are fading, some are stepping up to fill the fade. Looking at the last 1 month, oh, okay. Yeah, there's some pockets of deep red, some pockets of deep green. Look at 3 months ago. Oh, getting a lot greener. Yeah, why? Because American, right? America, let's go. Brighter green, right? Oh, okay. So everything goes up generally over 12 months. Yeah, but there's individual rotation in the meantime. Oh, cool. Okay. All right, we're at about 20 minutes here. So let's start moving forward. All right, so what I'm going to do now, I think I got through all of the most important stuff, and I think I got through this card here too. So we talked about the weekly notes. We've gone through most of the schedule. I have this stuff summarized in Slack here now. All right, and by the way, shout out to CRM, who now owns Slack, because they finally made this thing good, right? The updates have been meaningful. I really, really like the updates. Meaning, again, I can actually present a lot better now, right? On the YouTubes, when I present, it's a lot better. Having a look through here. So again, there's actually a sidebar here, which is actually really nice. Looking here, the big events for this week, like we mentioned before, is going to be, this is all the supporting evidence, by the way. So I've told you all the meat and potatoes in about 20 minutes. And now we're going to be focusing on the supporting evidence to make up that summary. So here we notice that on Wednesday, again, what do we have on Wednesday? FOMC economic projection, statement, interest rate decision, press conference. That's Jerome Powell. That's Big Daddy, Sugar Daddy, Papa Powell on Wednesday. We have a BOJ conference on Tuesday going into overnight. And again, in America and in the States, we're going to be in North America, we're going to be focused on Jerome Powell. Initial jobless claims coming in on Thursday overnight. And then on Friday, Jerome Powell speaks again. Very notable. Looking over to here, we got equities see 51.2 billion of inflows. Biggest inflows since March of 2021. Again, when the market went straight up, the biggest rally of the year. Sell in May. Don't sell in March. You sell in May. So 51 billion, biggest inflows, right? So cash suffers largest outflow since July 2020. People are selling their cash to buy stocks. What's going on here? And again, we have a potential of 500 billion coming in. So we got potentially 500 billion coming in here. That's a lot of money. So that's only about 10% of what we're expecting total, about $500 billion, right? There we go. China's nightmare Evergrande scenario is an uncontrolled crash, right? Oof, that's a bad headline. So again, Tina, there's $300 billion in value that's potentially at risk there. Goldman Sachs raises odds of U.S. Fed taper announcement. This is October 21. It's 3 weeks ago, almost 4 weeks ago now. Fed seen announcing bond taper in November. Rate liftoff in 2023. 2023, not 2021, not 22, 23. Here we go, Powell. Powell sees taper by end of the year. Is November before the end of the year? Oh, I think it is. But says there's much ground to cover before rate hikes. And since the last time we talked, the supporting evidence has been there, right? We've seen initial jobless claims get a little bit better. We've seen unemployment tick down a little bit, but again, still not in those key areas that he has been mentioning. And there's no inflation according to, again, there's no unreasonable or unacceptable inflation. There's always going to be inflation, but is it in an unacceptable amount? Inflation's a tax, by the way, so trying to keep that in check is important. Having a look here, what's also very important is that trying to keep in mind the spectrum of the voting members of the Fed. If they don't vote, they're scratched out. Why? Because again, they do a lot of flapping their lips and talking, but they don't actually vote. So I'm focused on the people who actually vote. I've been noticing that Clarida and Bostic have been actually flipping a little bit more bullish. And again, if we're not there yet, why would they jump the gun and announce in November? That would really surprise the market. One of Jerome Powell's greatest tools has been his communication, where he says that if this happens, then we do that. And so far, everything he's been looking for has lined up. So like, why would he deviate now? It doesn't make logical sense. He's been a very steady hand. And that's what I'm noticing here. So if announced this fall have already started moving over again, notably Clarida and Bostic, well, November's not the fall. September is the fall. So Clarida and Bostic have both moved over a little bit closer. So again, how many people vote? 1, 2, 3, 4, 5, 6, 7, 8, 9. Half of the camp is already over here. What do they need to pass? 5 or more. Okay, 4 plus 2. All right, and then we reviewed this last weekend too. Is the stealth crash in stocks already over? Meaning, individual stocks have already mostly come off their high, 10, 20%. And I think that the market has seen that individual stock rotation where, again, energy comes up, utilities come up, financials come up. I think it's tech's day. Why? If we're going to get a meaningful rally into the end of the year, I think it has to be a tech-led rally. That's the only sector that I could see rallying percents, meaning multiple percents on the S&P and actually holding it. Going through, I got a few more things to go through here. So let's go through the ETF and indicators. So QQQ weekly, again, looks good. If we can hold that 370, go check out Slack if you want to see more notes on these, or just pause the video if you want to read everything. XLF, so again, QQQ looks really good here. XLF, I still see a cup. It's still forming a handle, and it's still range bound. So again, just looking for that range break, 37.2, 38.5. XLV, very nice bounce off 131. It's still holding its uptrend. Looks good. VIX still doing nothing, right? Doing nothing. So not really expecting it to do much. With this week, if it did nothing, it's actually red, right? VIX is red with a whole week that we had. Oh, that's peculiar. That's peculiar. DXY, 2 times 1 day algo. So again, telling you that third attempt at 93.2. So again, it's formed a W. It's on its third attempt here. So again, 1, 2, third attempt. It should break it higher here if DXY is going to break out. That's the big question. These big candles on DXY really add a lot of pressure onto SPY. So watching for a continuation or a fresh rejection back to the 50 or a breakout. IWM still a nothing burger, but we've held the gains. So we've been range bound since the beginning of the year, which means the average investor is quite scared. Why? Because they don't make monies. If you make money, meaning you're green year to date, if you just buy SPY, right, make the monies. But if you're holding on to IWM, what are we at year to date? 13, right? It's not bad, but most of the gains came like beginning of the year, right? Right into the beginning of the year in January, right? Whoop! And then nothing. So what does that mean? People are scared. They don't want to lose. They don't want to lose the monies. Apple versus SPX versus seasonal. Again, quad top, lower low formed here. Quad top lower is just formed. It's not the lower low. So we're just watching for that break. Again, the break lower here before we ultimately rally up. And then fear and greed index. One more thing I would just note here. I think I forgot to mention this. So let's remove all the trend lines. Just look and see how we acted on the 50 DMA before. We have closed below it before. If we get multiple daily closes below the 50 DMA, that's where I start getting worried. Multiple daily closes below. One breach is just a breach. On OPEX, it doesn't really matter to me. Sorry, it's not that it doesn't matter. I can't give it the full weight because I know that they might break the chart to not pay out the chains. And there were fat straddles were put on going into September. So again, they called in the one side into Thursday, overnight into Friday, the call side. I think they double sold. They sold what they called in. They sold to drill it down because their 440 spread had to get minted. 445 is where they moved the spread for October and further. Options clues, again, this is a big clue for me, like as I've been alluding to before. Monday, we got, this is actually really nice. I really like this update by Slack, by the way. I can read my notes as I have this thing over here. It's actually really nice. Next week, we got Monday, 442. 442 is roughly the 50 DMA. So the reason why 442 matters is because I think we're doing a push-pull off of it again. Push, pull off the 50 DMA. So I'm noticing that 442 looks like early max pain based on volume. Let's see what converts, but that 442 looks like max pain here. It's on Monday. It's also on Wednesday, right? Same thing here. And we're seeing people, like, they're actually buying consistently. And here we got like 4 points. Here we got about 3. Going into Friday, what I'm noticing for Friday, it's skewed bullish, but there's that 442 pivot, meaning that, again, the push or the pull. So straddles imply that, SPY implies that. These straddles were on SPX too, just to clarify that. September 30th. So 445, 440, 435 put spread. So this looks like insurance. It's open interest. So this was accumulated going into Friday. It was not bought on Friday. So again, just looks like there's something strategic here going into that quarterly rebalancing on September 30. And now for October monthly here, it's going to be about a 30-minute video anyway. Hopefully you like this one here. I think that for a 30-minute video, it's jam-packed with quality content. Let me know what you think, though. Drop me a comment. And again, smush that thumbs up, please. Looking at October, we got a 445 straddle beefed up with roughly $14 in premium. As we reviewed earlier, that means a push down to roughly 430 or a push up to about 460. 445, 440 put spread as well, and we got naked 450 call open interest. So big numbers here. Again, I've highlighted them. Again, just looking like strategic, 445 down to 430, and 445 spread is what it looks like here. All right. This is where the big premium comes in. So again, these are from like Monday all the way through to Thursday. Again, what are they buying? Well, 44.50 and 44.75. Calls and puts, calls and puts. So that's what I'm noticing. So again, 44.70, 44.75, sorry, 44.75, 44.50, 44.50. This is roughly $400 million. We can have a look out to Wednesday. $800 million, same levels, roughly same premium. It's about 150 for both sides. So it's about 300 points. Same continuation into Wednesday and then also into Thursday. They stopped. So the move happened into Thursday. They were already positioned. Looking at QQQ, only two to snapshot here to give the story. So on Friday, we got 378 call volume. I would call it about $2 in premium. So again, 380 break even. If S&P is going to push off, QQQ is probably going to lead. That's a really good clue here. Also got a put spread with open interest at 375 to 370. And then going out to October monthly, here we can note that we got right a 370. We got 375 straddle. So again, on both sides, the 375. So again, pushing off or pushing up. 375, 380 call spread. So 375, 380 call spread. And then we got 380, 370 put spread. So 380 down to 370. So again, I've already told you the whole story. I'm just giving the supporting evidence now. Let me know whether this is too much in detail. It's just the right amount. I think we've already gone through indicators. And now here we go, the final wrap up. I think I should probably do this a little bit earlier. This is probably the best part anyways. SPY analysis for the monthly. We got 441 point. Let me actually click on this. I really like this, by the way. 441.8. So as we have a look here, we can note that we got 441.8 as the July top. So I'm just looking at where the arrow was right here. I'm looking at this July top, right? 441.8 key area. We closed 40 cents below it. 438.5 is going to be the July close. So the closing of this candle right here. 436.1 is the August low. So again, that is to save the monthly low. If we're going to put in a monthly lower, higher low, we cannot go below 436.1. On the weekly chart, the weekly chart here tells us that, again, technically we've broken the funnel higher. It's got really tight. Technically we've broken. So 435.99, 436.1, 436.11 are the lows. I'm looking at these three lows right here. So if we're going to maintain that monthly higher low, we can't lose 436.12. 1, 2, 3 weekly lows. If we're going to push down, that would be a fourth test of 436. The buy pocket is setting up if we lose the green line, potentially going down to as low as 422. 422 would be a higher low. Again, a higher low here. 421.9 is the current low. On the daily chart, here, what we can notice that Friday close at low and on volume. Again, we're discounting it because it's 1 day below the 50. If we get 2, 3, 4, 5 days below the 50, then there might be more legs to it. Breach of the 50 DMA. We're still waiting for the gap. I'm still waiting for the gap down pump up. That is kind of a signal for the bottom to me. I would prefer it going into Powell would be ideal. Also noting that he's talking on Friday. So I don't know, right? I think the first half of the week, if we got a gap down pump up, I would really like to see that. We haven't seen the gap down pump up yet. It's been, it's again, I got a feeling that's what we need to see. On the hourly chart as well, I'm just looking here. We can note that we got 441.8 at noon on Wednesday for a test right here. So that just means like being like right here on Wednesday, testing this this downtrend. So at noon on Wednesday, if we're gonna break bull, just watching for that 441.8 break, basically 442, the 50 DMA. 436.1 Friday apex. So if we just keep respecting these blue lines lower, we would land at 436.1 on Friday. So again, if we're going to hold that monthly higher low, right, it's already September 18th. Like we're going to get a clue going into the 27th here, which is basically the end of the month. So really important for me. If we keep fading, we would hold support, but we would test it. That's it. About 33 minutes, a little bit longer than I originally planned, but I think that is jam-packed with value. So one more time. Jerome Powell, we plead to you. We ask you to please make the lines go up. We request that you respect the plan you've laid out so far and that you stay true to your word. Please, Powell, we hope and pray you don't do nothing. With everything said and done now, I think that if you have anything left that you're looking at for the week ahead, please just make sure that you make yourself a plan, because you might look back and be like, oh my goodness, how did I do this again? If we have a look back here at the calendar of events, and we have a look at the, oops, let me just go here to, I think it was under, this one here? No, it's under indicators. So again, if we're looking at this here, and we're gonna get, if you watch the March rally happen when there was big inflows and you didn't participate, I think you have to pay attention now, because again, money's flowing in, the chart is setting up. It looks like it wants to go up. People are scared. We're right around strong support. Powell's up. And I think if Powell delivers what we think he's going to, it's going to be very, very nice. Again, potential for us to go lower, but we have a clear plan in place. I wish you all the best of luck. And thank you for the support. See you next week.